Hello and welcome to another podcast for the Independent Finance Brokers Forum. It's PJ Patterson, the chairman of the IFBF, and I'm here today with Tony Wakim, who is a BDM with PepperMoney. We're going to talk about Pepper, about your journey, and see where this takes us.
Awesome, thank you. It's a pleasure to be here with you today.
We're also very happy to have Pepper on as a sponsor. I think they've been a sponsor of the IFBF now for a number of years, and it's always good to have you guys in the room talking about a variety of things we'll get to, I'm sure, shortly. But let's start off with maybe a bit about you. Who's Tony?
Tony is a senior BDM at Pepper. So I was actually having a conversation yesterday. This will mark my 10 years in the finance industry this year. So it has been a journey, starting off as a broker initially, making my way across into the BDM world quite early on in the white label space, and then finding home for me personally at Pepper. So it feels like home.
How long have you been at Pepper?
A year and a half now.
Okay.
Yeah.
Fantastic. And so a 10-year journey bouncing around, obviously a broker for how long before you?
Yeah, so I was a broker for about 4 years.
Okay.
All up, yeah. So I get to see both, both sides of the journey in the finance game. So, and that really helps me be a better BDM because I can understand the pressure and the stress that a broker does go through every single day.
Well, I was just going to ask you that question. What have you found from your broking days has assisted you in being a BDM?
Yeah, well, I guess for me, I see the broker almost as a enabler of a customer's journey. So, the customer comes to the broker with a vision, and it's the broker's job to almost bring that vision to reality. And if I could be one of those, tools that the broker uses, whether it be, the paintbrush or the ink to make that vision a reality, really does bring that fire out to become a better BDM. So it's understanding what it's like to be a broker, and not exactly what I need to be as a BDM to help them achieve that goal.
I think that's a really powerful insight. Oftentimes we hear, people are BDMs and then become brokers. It's not often you hear the other way, or maybe it is, I don't know. I don't meet too many people in the industry who were brokers and have become, lenders or whatever. Usually the lenders are there going, oh, this broking thing is easy. I'm going to go do that, right?
Yeah.
And then they go, oh, this is actually really hard. What have you found in the last, maybe changes in the last few years from that point of view of now being a lender and no longer a broker, things that have changed in the industry? Yeah,
absolutely. So look, the job of a broker has become a lot harder, in my opinion. The number of things you have to do, both from a compliance perspective and from an NCC perspective, right through to actually understanding your customers' needs and desires, because there's so many lenders out there, there's so many different options, and there's so many different solutions you can provide your customer. So, it's not a simple task anymore. It's not an easy, come in, let me see what I can do for you, and here's a solution. It's more about understanding, what is the actual best solution for you today, and what is your future journey. So that 5-year, 10-year progress is really, really important. It's no longer just a transaction. It's a relationship you're building with your customers.
I love that you've just said that, because that's something we do talk a lot about at the IFBF, is that we aren't order takers. We are relationship builders. I just did a podcast with the guys with Rahul from Connect 360, and we talked a lot about client retention.
Correct.
And that's about relationship, and so that's a wonderful insight, and I think very true. Let's talk about Pepper now, because Pepper obviously has come a long way from when it originally started doing business in Australia. Probably, gosh, I don't know. How long has Pepper been
25
around?
years.
25.
Yeah.
I was going to say 20, but 25. Okay.
Yeah, it's 25th year this year, so it's easy to remember. 2000 we launched, so it's progressed with that one.
And they started as really a non-bank sort of more alternative style.
Non-bank lender.
Well, you're still a non-bank lender, I guess, technically, even though you're ASX listed.
Yeah.
But more in sort of the alternative credit space.
Yes.
So more, if you want to call it bad credit or alt docs, all those sorts of things. But you've more, I suppose it's transitioned a little bit in the last few years. So maybe just paint the high level, a broad brushstroke of who Pepper is and the type of business they're looking at doing at the moment, and then we'll delve into a bit more detail on that.
Yeah, sure. So look, Pepper came out originally in 2000 as a alternative to new mainstream lenders, where everyday Australians that would be facing certain difficulties with being credit report or ABN lengths, whatever it might be. They didn't have an alternative to go to. And Pepper really wanted to come out there and be that helpful solution for those customers. And it's funny, in the 25-year journey, we've achieved so much as an organisation, but we've never lost focus of the customer being at the heart of what we do, which, is a real testament to Pepper being always true to itself, which is just being a very helpful lender, providing helpful loan options. So, 25 years in the game, we have a lot of experience. We've learned a lot over the years. We've gone through a number of GFCs. There's been changes, regulatory changes, but we've never steered away from our true goal, which is just to be helpful for everyday Australians.
And provide a product set that probably ticks more boxes now for everyday Australians as well. We'll get into that in a moment, but I was looking at my notes, and I think you guys have won some awards recently. Is that right?
So
Tell us about that.
Yeah, 8 years running in New South Wales, we've won the non-conforming, the non-bank lender of the year.
8 years running.
8 years in a row. And we recently took out the national award as well for that one. There pretty much isn't an award that has been awarded to any non-bank lender that Pepper hasn't won, or been in the running to win. So, and we really pride ourselves on that. But that awards actually brings a lot of pressure, because you can't rest on your laurels. You've got to be, how can I win at 9 years? How can I win at 90 years in a row? So what can we do to continually be the number one option for our brokers when they're recommending non-banks to their customers?
So paint the picture of the typical, if there is even a typical client that you might be seeing coming through the door right now for Pepper.
Yeah. Look, because we have such a wide breadth of options, the easiest way to explain it is somebody who doesn't fit the mold. So, we've all heard of unicorns out there. It's a beautiful, we all can paint it, but has anyone ever seen a unicorn? No. So same thing with a clean-cut customer. 80% POYG, clean history, 80% LVR. It sounds fantastic.
30% deposit.
No one's ever seen those, right? It's very hard to get those sort of customers. We know what they look like, but reality is life happens, right? 1 in 3 Australians will go through a life event that will impact their credit, and that is 33% of the market. Now that's just on credit side of things. You've got people with short-term ABNs, you've got people with ATO debts, whatever it might be. Real life events will impact their situation, and this is where Pepper really steps into the game and says, hey, we're here to help regardless of your situation. And that's why we have such a wide breadth of products across everything from residential to SMSF, commercial, personal, asset finance. Almost any Australian needing finance has a home at Pepper.
That's wonderful, and again, I think we'll probably talk a little bit of product shortly. I was, as you were describing all of that, it took me back, and I'm going to date myself here, but I've been in the industry about 25 years, and I remember when I first got in the industry, and Pepper was new on the scene, and a few other non-bank lenders were kicking off their operations as well, and I can remember thinking to myself, I don't want to deal with the bad credit client. And I had that mentality for a couple of years, and then I ended up getting a client who was referred to me by an existing client who had a situation that was requiring a non-bank lender. I don't remember who I used. I'm sure it was probably Pepper back then. But I remember the satisfaction of being able to provide a solution to that client. And that there's no such thing as there are bad clients out there and people who truly are trying to do the wrong thing, but then there are people that just bad things happen to. And I thought I would share that story because I think for brokers, and I don't know if you still get this objection, so this is really the question, is when you're out talking to brokers, do you still get that, no, I don't deal with bad credit or whatever the thing is in their head client, so therefore I would never have a Pepper deal?
Yeah, look, it still does exist, but to be honest, it has deteriorated over time, and I think that's a big testament to the education that we at Pepper provide, but not just Pepper, but the entire lenders in the non-bank space provide. It definitely was there. Even when I started broking 10 years ago, my first loan ever was to Pepper as well, exactly like yours. So, and I had the same mentality. I don't want to deal with these types of clients, and most of it comes from a lack of education. We don't know what these look like. To me, it could be a bad customer, but once you understand that, it's an option for these customers, they're actually the most stickiest customers you will get is somebody with a bad credit, because you helped them out of a situation where the bank said no. And they turn to you as their broker to really help them out of that situation. So, and look, as 73% of the market is now written by brokers. So if you're not writing this space, you're missing out on 33% of the industry, whilst the number of brokers continues to grow. So in terms of diversification, these types of customers, it's 1 in 3. It's 1 in 3 of customers.
That's an astounding statistic. I didn't realize that it was 1 in 3 customers have some sort of adverse credit event that might cause them to not be able to get bank finance. And just to pick up on something you said, because it's absolutely true, and it needs to be highlighted again, and that is, when you help a client who is in this kind of situation, they will absolutely be clients for life, and they will never go anywhere. I mean, I suppose they could. You've got to really mess up the relationship at that point. You've just solved their problem. You've probably saved their house, maybe done something else, given them a bit of cash flow or equity or something like that to live on. And they will absolutely love you for the help, where a lot of people, let's be fair, and banks in particular, would have said, no, just sell your house.
Correct.
Do you have any recent stories of something like that happening where a broker has, gotten someone out of the poo?
Yes, mate.
You can change the names, of course, to protect the innocent.
We'll protect it. But I had this one particular one, and it really stuck with me because it was a particular customer. It was a couple. They were separating, going through a very messy separation, and one of the applicants was looking to retain the house. She had raised 2 of her children there. One of them who had passed away in that house. So to her, the sentimental value of keeping that house was more than just 4 walls and a roof over their head. But we were able to prove, the intent on her behalf to continue to make those repayments whilst the separation was going through. Credit report was an absolute mess. But this is where the power of Pepper's tech, because we obviously run our CCR, but having that human behind it that can sit there and look at the thing and say, you know what, like, even though it looks really terrible, we can see the intent to make those repayments. And we were able to save her house. And, the broker called me crying at 5 p.m. on a Friday saying, I can't believe we did this for the customer. It was not a big deal. So to be very frank, it wasn't like a $2 million deal. It was a couple of $100,000. But that satisfaction that the customer had, that the broker had, is exactly why we as Pepper exist, is to help those customers to say, hey, even though everyone's going to turn you away, we won't. We want to understand your story and give you a solution for that.
That's an amazing story, and I think, it triggered me to ask you and to clarify this, because I think it's important for brokers to know how Pepper's credit department works. It sounds like it's still similar to what it has always been, where a human being is picking up a file and you're workshopping it with the broker, and you're trying to understand from a credit perspective what is going on here. Correct. Which is, let's face it, a lot of lending now is done by computers, and it's auto-decisioned, and to, if you get a no, if a computer says no, then it's like an uphill battle to try to get that reviewed. So do you want to just walk through how Pepper approaches credit? Yeah,
absolutely. So look, from our perspective, we love technology. We don't see it as a bad thing. We actually leverage technology substantially. And we're very proud to be the leading non-bank lender out there in terms of technology. We've got, digital upfront, right through digital execution. But when it comes to the credit decisioning, we have a lot of tools there for us, for the credit team specifically. So when an application comes in, it gets screened already. The credit report does get screened, and it gets placed in a particular loan and a particular product. But, and this is the big portion of why Pepper is so successful, is there's always a human behind that assessment. So there's a phone number you can pick up and speak to the assessor and say, XYZ, can we look to potentially upgrade this product based on XYZ? And there is a human that makes those decisions. Even the upfront, so before you even submit the deal, if you're worried about where it's going to sit and have a really plausible explanation why it can be somewhere else, we can run that with a senior credit person who gives an approval on the spot for that particular policy, so you don't run into those things when you submit it. So technology is fantastic, but we can't rely on it solely because there's a human element, especially in our space. And I believe we truly have some of the best humans in our credit team that understand the Pepper appetite.
That's really cool, and I'm going to put you on the spot now on something, and that is, a lot of BDMs give lip service to brokers about saying, well, you know, if you're having a tough deal or whatever, just call me and I can workshop it with credit or do whatever. And look, you're not superheroes. I mean,
Yep.
you didn't walk in here wearing a cape, and you
Yep,
can't
yeah.
solve all the world's problems.
Correct.
But I know you work pretty hard for brokers and advocate
Yeah.
for us. So as a BDM, can you just elaborate on that comment and just maybe explain how you would typically work with credit if you had a tough scenario, you were trying to get a broker's deal over the line?
So my first point is to speak to the broker and understand what's actually happening here. So is it a credit issue? Is it a policy issue? Is it an income? Whatever it might be. And then understand the rationale behind it. So if the broker feels strongly that this is a particular, like if we're saying X and he's saying Y, my job is not to say, no, it's actually X.
And because you sit in between and you've been in both, you know, you're a lender and you've been a broker, you can speak credit, you can speak broker,
Correct.
you can, try to bridge that gap. Is that a fair comment and how you approach?
Yeah, absolutely. So, I like to spend at least a day in a month sitting with my credit team, not speaking, just seeing how they work, what deals they're picking up, how they're speaking to the brokers over the phone, what kind of conversations they're having, what their day looks like, because look, end of the day, they're humans too. Brokers have the pressure, customers have the pressure, BDMs have the pressure, but so do credit officers, and their job is just as tough as ours. They have to try and sometimes understand something that's not written. So for my job is to make the broker's job as easy as possible, whilst making the credit job as easy as possible, and that's the middle ground that I love to operate in.
That is really cool that you spend that time sitting. So you literally go and sit for a day quietly in amongst the credits, so you don't
Correct.
disturb them and spook them. They run away.
Oh no, I'll do it every now and then. Like, hey, this deal, can we just sneak it in? But yeah, no, it's more about just understanding what their day looks like and how they work.
Yeah.
It's interesting. It's very interesting to see different perspectives.
I think that's amazing. I've never heard of a BDM doing that, so I commend you for that. I think that's awesome. And for any BDMs listening to this, watching this, maybe you should do the same thing. Not because you're not good at your job, but I think you'd be better at it.
Correct.
Clearly,
Gives you
if you have that insight.
Appreciation of what happens behind those doors.
Now that leads me to a question, which is something we talk a lot at the IFBF with our brokers and to our brokers about the summary notes. The initial front page of that file that goes in with the story and the other things that are relevant. First of all, how important is that to the credit team to get detailed notes?
Imperative, especially in our space when you're talking, non-conforming loans, short-term ABNs, things that are really out of the box. We need to see those notes. We need to understand your thinking, the customer's thinking, and how this product is suitable for their situation. So notes are imperative. And, I put my hand up when I sit with credit. I'll make sure they read those notes, and I can guarantee you they read those notes. So
I'm glad you do that.
They're reading them. Credit are reading your notes.
I am thrilled that you do that, because the number of times we have submitted deals to not Pepper, but to various places, and we get a phone call about something, and it's just like, well, have you read the notes? Because we commented on that. And like, oh yeah, maybe I should go read those. And you just go, seriously guys, like, come on. This is why we write them.
Absolutely.
That is awesome that you do that. Just on the non-conforming side, because this is something I had to learn in the non-conforming space in particular, and I'd love to hear your feedback and comment on this, is the notes, I reckon you tell the credit, you tell the lender everything that's going on. So, brokers tend to have this view that maybe we massage the information a little bit or paint it slightly differently or whatever, and I think maybe generally that might be okay, but in non-conforming, what's your view on that? Do you just put it all in there, warts and all, and go, hey, this is the problem, this is the poo sandwich that we've inherited, but this is how I'm trying to solve it with you as the lender?
Absolutely. The more honest we are with our notes, look, we're going to see the defaults, we're going to see the mispayments. If it's an oversight, that's fine. Like, here's evidence of savings in that month that they had the money, so it was an oversight. We'll see that in the notes. But if we just inherited, like you said, a credit report with 5 missed repayments, no notes, it's like, well, where's his money going? Oh, if you read the notes, they're in the savings. So you can see that type of stuff. So yeah, absolutely, it's imperative that we have as open, honest dialogue as possible, because in those conversations, if the customer says to you, for example, I didn't want to make the repayments because I don't like the bank, then you as a broker will know, well, this is potentially a customer that we should not lend to. So those open conversations, having them up front, putting those notes in, really helps us understand the customer situation and makes us want to help them and do what we need to do.
Yeah, I think that's great. And I have found, rarely do you get that client that's like, well, I've just stopped making my repayments because I don't like the color of the bank. I mean, it's usually, there's always a story behind it, and I think telling that story, especially when you're in this non-conforming space, is critical. You have to do that. So if you're thinking about as a broker getting into that space, key takeaways from that is put a lot of notes in. Don't be afraid to take on that client as well, and talk to Pepper.
Absolutely.
Because they love that kind of stuff.
We're here to help.
Yeah. Now, you don't just do non-conforming, you also do conforming loans and other types of more closer to conforming type loans. So tell us about that.
Yeah, so look, we've got a wide breadth of options at Pepper. So if we're looking at residential loans, we've got things that we do compete with some of your traditional lenders, and what we compete on is our policy. So things like longer loan terms, interest onlys, the way we look at their income, the way we look at ABN, the way we look at self-employed financials, right through to the alternative documentation sort of stuff. So people that are self-employed that don't have their financials ready, that have alternative options to provide us, whether it be through the BASs or the business bank statements, we have options for those customers. But what we then have is a scaling model of products. So it goes from your prime right through to your near prime and your specialist and your specialist plus. And we understand in that space, most brokers, that don't write Pepper every day, it could be a bit intimidating. Like, which of these 5 products does it go into? And we've invested in technology to build a system where brokers can jump in, answer a few questions, and the product will come out, and it'll give you the repayment, it'll give you the rate. So you have that confident conversation with your customer upfront, because look, brokers know what to say to their customers. They know the right questions, the trigger questions to get certain answers, and sometimes that will give you a indication as to whether or not this customer will sit with a particular lender. I mean, I did it when I was a broker. I would speak to customers, and as I'm having the conversation, I'm already thinking, is this at this lender, is it at that lender? I'm trying to put time to policy. But if someone says to me, I had a really bad divorce, or I had a really bad business that went downhill, as a broker that prompts me, hang on, there could be something on their credit report here. Maybe a default, maybe a mispayment. So I would straight away run into the product selector at Pepper and be like, which product? And it will tell me it's a specialist because there's a default on the credit report. So it helps you up front, and that's how we help you guide which product in the residential space. But then we've also expanded our offering now to look into commercial and to look into self-managed super funds. And we've brought that same mentality of putting the customer at the center. So we offer things like SMSF, but alt-doc SMSF, so alternative documentation, for those self-employed customers looking to purchase an SMSF that don't have their financials ready. The same thing with the commercial space. People that do have credit impairments are usually locked out of SMSF and commercial, that literally can't get funding anywhere. We at Pepper have now provided a near prime offering for those customers. So
in the commercial space? In
the commercial and in the SMSF. So we don't want to be a lender that says we're great for non-conforming customers and for customers with issues and wanting to say we're helpful, but sorry, can't help you here. It's how can we offer more solutions? And it really ties into our our mission statement, which is helpful loan options. We want to be known as the home of loan options, and with those sort of offerings across the board, we really are becoming that niche, non-bank lender that can give you pretty much everything. And those awards speak for themselves, but it's off the back of having that diverse product offering for the customers.
Yeah, it sounds like it. That's amazing. And there's something that you said a moment ago that I picked up on, and I wrote this thought down, and I think it is now with the saturation level that we're reaching in mortgage broking.
Yes.
It's sort of like we are now in the age of policy.
Yes.
And which is something you just highlighted, is that asking the question, is this a servicing thing? Is it a policy issue? Is it something else? And it sounds like Pepper is really good to work with around policy in particular.
Correct.
Do you want to elaborate on that?
Absolutely. So I actually pride myself, and I say this often in my meetings, we don't have a credit policy. We have a credit guide at Pepper. So everything's a guide. And the reason why I say that is because we want to understand the story behind the situation, behind this particular customer. So we're not going to compete for long if we're saying that's the policy, go somewhere else, it's not going to fit with us. This is not our space. Our space is being helpful. And to be helpful, you've got to be malleable. You've got to change, you've got to adapt. And it's a testament, truly testament to the leadership at Pepper, to always being, we're big enough to support and have a reputation, but we're also small enough to be nimble and adaptive to our brokers and the appetite as it changes.
I love that, and I'm going to ask you this follow-up question, which is, because you've disclosed that you spend so much time, with your credit department. When you see or they see something that might be slightly outside of policy, how is it approached internally? Do people have the ability to, within a certain parameter, just sign off on something with obviously the reason behind it? Does it have to escalate to higher levels of management for sign off? I'm sure everything eventually does.
Yeah, correct.
How does that work?
Yeah, so at Pepper, our credit team have a DCA level. So obviously the higher the level is, the more you can approve and exceptions you can approve. But anytime where there is, and this is typically how it happens. So for example, we have an application that comes in, something sticks out to the assessor that says, look, it's not within policy. There's no such thing as a decline. It's speak to the BDM. Tony, have you spoken, to the broker about this particular situation? Let's just say I haven't spoken to them, I haven't known about it. I'll call the broker. Most of the time, the broker says, I actually did not know about this. So what can we do here? And instinctively, they're like, oh, I have to find the lender. It's like, no, we can work with it. Let's get more information. We get the more information, go back to the team leader of that assessor who has the higher delegation, and just say, hey, this is the situation. The assessor assessed it correctly. Policy says X, but here's the explanation. Can we consider it? And, based on what it is, most of the time it's a yes, we can. Here's the exception. Goes back in the queue, and we just move on.
I love that. It's such a refreshing thing to hear that lenders are out there still doing that. I think we've gone through a very interesting period of time in Australia in relation to the Royal Commission into banking, and then all this other stuff going on. It seems like I don't know. My opinion would be that we're being overregulated at the moment. So It's nice to see you guys have found a way to deal with that situation and still write loans for people in need. I think that's fantastic. I'm just looking through my questions to see what else we might want to cover. So you mentioned commercial and self-managed super fund, which I think is a really important category of lending now for brokers to be getting involved in. So let's start with this. What percentage of Pepper's lending is now commercial, and then maybe SMSF?
Yeah, I don't know the exact number, but I do know that it is growing, exponentially year on year, and that's obviously due to the market itself. So the number of SMSFs out there that are being created by accountants year on year it's growing, astronomically. I think in 2018 it was like 12,000, and in 2024 it was like 37,000. So the growth is there, the appetite is there, and for us to tap into that is very important, because that's another tool in our brokers, further cap to say, hey, I can also offer you an SMSF loan. And commercial is the same. So, post-COVID, we've seen a realignment of valuations for commercial. So there's now, coming in at price or at value. So the appetite is there for commercial, especially with, factories and the new airport that's now being built. That's pretty much going to be a lot of freight. So a lot of factories being built around there, a lot of businesses looking to invest in Australia. So the commercial space is expanding, and we are looking obviously to support wherever we can with our brokers by giving them an option in that space.
Can you just elaborate on your commercial product suite a little bit, and just for everyone that'll be watching this video, explain sort of what is your niche in terms of commercial and what you're looking for, what type of business?
Absolutely. So with our commercial offering, I tend to look at it more like a residential loan with a commercial security.
Okay.
So we've built it for our brokers that are very familiar with residential lending, might be just tapping into the commercial space, with a lender that really tries to hold their hand and help them. It doesn't mean those very familiar with commercial don't like the product. They absolutely love the product, and the reason why is we've taken some of the nuances away that occur and happen within the commercial space. So things like GSAs, we don't have that, so you don't have to get a guarantee of the business.
So GSA is a general security agreement?
It's a guarantee, essentially a business guarantee of the loan. We don't need that. So, mum and dad can buy it in their personal names. We have no issues. So residential sort of lending, but with a commercial asset. Mm-hmm. And another key aspect is we give 30-year loan terms with a 5-year interest only. So some of our peers will give a 15-year loan term and 5 years interest only. So, in 5 years' time, you've got a $1 million loan over 10 years to pay back. So we give you a set and forget almost loan. We do reserve the right to run an annual review, but we haven't done one, to be honest. So that most of the time, most of those customers that do have commercial assets, It's one of the biggest bugbears. Every year is provide financials, get evaluation done, provide financials, get evaluations done. It doesn't help anyone. It's just the customers, it's not a good experience for the customers. So we win a lot of business on that space. And it comes back to being really helpful. So speaking to commercial brokers, what's your biggest bugbear? GSAs and your reviews. Fantastic. Can we get that funded without having those policies in place? Yes, we can. We're in that space. But we're looking at more bespoke stuff in the commercial space. So NDIS, boarding houses, student accommodation. We have that sort of boarding houses is a big one at the moment. Even NDIS is massive as well. Vacant land. So we have that appetite in the commercial space. We're not just saying warehouses, factory, shop fronts, that's it. We do delve into the more bespoke commercial stuff, and that's where your traditional commercial writers come to Pepper.
Okay. That's really good to know. I know there's been some stats recently around commercial lending as a percentage of the broking community's share of that, and I don't know the exact stat, but I think it's around 30 to 35% of commercial lending.
Of resi.
It's the exact opposite of resi,
Yeah.
and because most people are going to banks to get this funding, which is interesting because of the saturation level of mortgage broking.
Correct.
You would think that wouldn't be the case. So where I'm going with this is to say that, and it sounds like this is Pepper's experience as well, there's an opportunity there
Massive.
for, again, brokers to just go to their current client base, identify their self-employed clients or whatever, and find out if they're looking at buying commercial or whatever, and offering them a solution.
Yeah, so look, if I had a magic wand, I'd love to know the statistic of brokers that refer commercial deals to banks or to bankers, because traditionally that's how commercial was written. I don't know how to write commercial. I would just palm it off to a bank manager that I've met through whatever network I'm in, and that helps both yourself because you refer the customer, you still kind of keep that relationship. But now is the time to get into the commercial space, and this is why we've built our product out for customers also for brokers, that's 73% of the market, that write residential. It's like you don't have to learn a whole new policy, you don't have to get this different way of thinking. For us, just think residential, but you give me a commercial security. So that enables the broker to be like, okay, maybe I can give it a go. And that's my experience with most of the brokers. When I say, do you write commercial? No, I refer it out. Okay, next one, let's sit down together. Give me 5 minutes of your time. I'll tell you if it works. And it's like, is it that simple? Absolutely. And then they become commercial experts. And it's the same thing with SMSF. It's more mainstream SMSF, but at first it was that hesitation. It's very tough, and it's easier to write than a residential loan. And I always say SMSF is the easiest loan you write. It's the simplest loan you write because it's highly regulated. There's only certain ways you can look at it. So, and once you enable that confidence, and I feel like we do it very well at Pepper with our education. We have a massive education program at the moment where we do webinars, fortnightly and monthly, just to educate our brokers on these things, and that's seeing a massive appetite because it's truly about explaining how simple things can be.
And that's a perfect segue into the education and stuff that you guys do. So you mentioned you do fortnightly webinars.
Fortnightly and monthly webinars.
What else does Pepper have available on the website
so
or whatever?
We've got a resource hub on our website, so Pepper Broker, where you can pretty much have any tool you want from Pepper without logging in. So we call it an ungated access. So things like our pricing, our postcode tool, understanding our servicing calculator, looking at our product guide, not product policy, and seeing all the videos, all those webinars that have been recorded. If you miss them, you don't miss out. You can jump in. We educate you on everything from how to sell a non-performing loan to how to write an old block to how to write an SMSF. So really empowering our brokers to not just self-serve, but because you always have your support of your BDM and your RM, but there are resources on our website to help you with anything you kind of need.
That's amazing, and it's ungated, so that means you don't have to set up, you don't have to be accredited even with Pepper. You can just jump on there and just go for it.
Start learning, absolutely.
That is really cool, because a lot of the times, you've got to get accredited, then you got to get login, username, password, and then, that's amazing. Well done to Pepper for doing that. Looking back over the last 10 years of your career,
yes,
and maybe what you see going forward, what are some of the big changes you see on the horizon in mortgage broking or finance broking in general?
Yeah. Look, the biggest one, probably the biggest elephant in the room is technology and AI and the use of AI. I'm a very strong believer that AI is a tool rather than a replacement. The easiest way for me to describe it, and I thought about this the other day, was, like a dentist. As much as you want to sit in a chair and have, the machine touch your mouth, you want someone who's a professional behind it. You also don't want someone who's using the same tools from 1970s. You want someone who can use the technology at hand today, but know that their hands are the ones that are doing all the work, not the tool. So for me, technology, AI is fantastic. It helps both the customer and the broker get to yes a lot quicker, but the person behind it will never change. So, and that has to be the human element. And to me, the brokers that trust technology, that leverage technology, that expand their horizon and literally and start diversifying in all these different suites, they're going to be the ones that will reap the benefit from this massive change that's happening.
I love that answer, and it's got me thinking too about, for the brokers out there. So this is open mic time for you, right?
Yep.
Brokers out there who have not ever written a non-conforming loan,
Yep.
and that you would have a message for right now. What would that message be around, I suppose, what can they do to seek out and get acquainted with writing this sort of business?
Yeah,
What would
absolutely.
be your pieces of advice?
My first question to them is why? Is it, when you say you don't see non-conforming loans, do we really understand what non-conforming is? And I like to push more towards non-bank rather than non-conforming, because to me non-bank is, we know what a bank is. You're a square peg, that's it. Where with us, non-conforming doesn't mean bad credit. It means, I just started a very successful business that's only operated for 6 months. So how can I get this loan approved? Well, you can't with a bank, but you can with Pepper. We've got those options for short-term ABNs. People that are extremely successful that had an oversight and now have a debt, like a tax debt, or that need to get cash out to expand their business. These are customers that Pepper will help every day of the week. But so when you're seeing these customers say, I don't see those customers, you don't see those types of customers, it's very rare to do that. So it comes back to education, understanding what non-conforming is, and most of the time they're like, I do see those types of customers.
Would it be a simple question maybe of saying, have you had a deal declined by a bank recently?
Absolutely, absolutely.
And then just go from there, because all of a sudden it's like, well, if the bank declined it, maybe Pepper should have a look at it to see if it falls within your policy guidelines and what you're willing to do.
Correct. And look, with most of our aggregator partners, we have what we call a Pepper Resolve system, which is, if you do get declined, you're actually going to get approved by Pepper straight away through the back channel, running that same Pepper product selector up front, but now run it on the back end. So that conversation is not going to be awkward, like, oh, you got declined by X, Y, Z. It's like, hey, I got you another option that will fit with your certain situation. So it's about ring fencing.
How important is that? So this has got me thinking too, and I'm sure you'll have tons of examples of this, but an example where a broker might have had, XYZ bank, he or she put the deal to that bank, thinking, lay down misere, no worries, they'll do this. They didn't do it for some reason, and they brought that deal to you, and you're just going, we'll do it all day, prime, they're not going to get the bank rate, I suppose, but they're going to get something maybe pretty close to that.
Absolutely.
Any examples of that recently?
Well, I had one literally exactly the same this morning, where a particular customer was PAYG. Her employer said, you got to go as a contractor. Same employer, just has to invoice monthly. Then went back to PAYG because it was just too hard to get through the lenders. So the broker's like, well, she's with the same employer for 5 years. There was 3 months of her being contractor. She's back a month as a PAYG. Lender's like, nah, she's 1 month PAYG, what are you doing? And he's like, well, it's 5 years. And like, nah, sorry, can't do it. But for us, it was like, mate, this is a no-brainer. Well, of course we'll help her. It's the same employer. We can see the ATO statements. We can see everything. And that's just one example. And to be honest, it's mainly the first time brokers use Pepper. It's the oh my God, everything's burning up. It's a cooling off expired. I was going to get it through here. I waited 6 weeks, got a decline. Can you help me? It's like, yes, our SLA is this. I'll get it done for you. And then it's like, hey, I got this other deal now. Can you guys help? So we go from being the lender of last resort to actually the first lender of thought. Like, okay, you helped me last time with this one. Rather than going through the exact same experience, can I put you up front? It's always a yes.
That's incredible. That's still the experience that people are having out there with that story you just described. The next question around that for me is, and this is always something I was,
Yeah.
I guess, taught around non-conforming lending and even non-bank lending now, I suppose, is you can say to the client, well, you're not going to necessarily be with that lender forever.
Correct.
But this was back before lenders like Pepper then created other more near prime and even prime products. So the question is, are you finding now that if someone comes through the door as maybe a non-conforming and they're on not a great rate and whatever, that they eventually, work their way up into a conforming and even a prime type product and stay with Pepper and don't go elsewhere?
Yes, absolutely. So we have a number of customers that have been with Pepper for a number of years that could go anywhere else. But because we help them with a situation where they were a specialist, let's say, and over, after 6 months they go to near prime, after another 6 months they go to prime, those customers are very loyal, they're very sticky. But we absolutely have pathways for customers to go from specialist right through to prime within 12 months. We absolutely have those options, and we promote that. They want customers sitting on a specialist for 4 years. It doesn't make sense to those customers. So absolutely, we support that.
And typically, does the broker need to drive that conversation? Do you just automatically sort of review it in the back end of your processes, or how does that work?
Yeah, so look, we are very much driven by our brokers. We trust them as the introducer to have those robust conversations. We don't want to be calling the customer and taking that relationship away. Obviously, in the non-bank space, relationships are very, very key and very vital, so we don't want to impede on that relationship between the customer and the broker. But every 6 months, like the customer or the broker can call us and say, hey, they've had 6 months of clear repayments. Can we look at a rate review? And we do entertain those substantially, especially as rates start to drop. It's a lot easier to give those discounts to customers who have, they might be with us because of a default that will not be removed for 5 years. Doesn't mean they have to sit on the exact same rate for 5 years. We can give them 6 monthly discounts on their rate if they're paying on time. So there's absolutely those options too.
I love that. That's really good because, I think, again, we were talking about retention earlier in an earlier podcast, and that is great that you can work with a lender where you can, effectively retain that client. Correct. By simply having a conversation with a lender and saying, hey, they've been good. Can we,
it's just
can
one
we improve
email
on their situation? I love that.
Single email.
What else? Tell me what else you're seeing in the industry right now. Any words of wisdom or anything you think brokers should be focusing on these days?
It's just, what's the opportunities? There's a lot of opportunities out there. We all know about the red car theory, right? I mean, how many red cars have you seen? 0. Then if I tell you start looking at red cars, you're going to be like, oh, I saw 15 today. And the same goes, and it comes back to the conversation, the topic we spoke about previously, where how many non-conforming loans do you see? I don't see any. Well, start looking for them. Because I guarantee 1 in 3